Hey everybody, Brian Shannon here from alphatrends.net. It's Friday, the 25th of April, and we had a good week in the markets. It started out on a big gap lower on Monday, but Tuesday, Wednesday, Thursday, Friday, we were higher here. So up for 10% for the semiconductors. So amazing volatility continues to be the theme in these markets. I've been largely treating it as day trading because I haven't trusted it, and that might have cost me a little bit of profits, but I'm still well ahead for the year and well outperforming the market. Hopefully you are as well. We look at these anchors and call them levels of interest. The anchor from the all-time high here on the S&P 500, of course, last time we came up to it, we did find supply there after a day or a day and a half or so. And then this week, we came right up to it. Yesterday, we almost tagged it. Today, we did. Looked like maybe it was going to hold as resistance, but this is why we call them levels of interest. If we're still above the daily VWAP, if we're still above the 2-day VWAP, if we're still above a rising 5-day moving average, we look at it and say, here's a level of interest. I'm not going to sell short against that level because we have this pattern in here right now. We have this gap up high low, then we have this higher low and another higher low. So right now it doesn't make sense to sell short. We still have a declining 20-day moving average. We still have a declining 50 and a declining 200-day moving average. Usually rallies don't follow through, usually, but not always. There is no always in the market, which is why we keep an open mind. This is looking like an important higher low. And again, that occurred after Monday's gap lower. Tuesday, we saw the gap higher. Wednesday, we saw the gap higher. And Thursday, Friday, we added to those gains. So, in the intermediate term, higher highs and higher lows above a rising 5-day moving average. We're in this area where if we go up just a little bit higher here, you can see that we're close to closing this gap right here. And maybe it's going to run all the way to the 50-day moving average in the year-to-date anchor, which is those two blue lines. The dashed line is the 50-day moving average. Bottom line is we have mixed messages still. On the weekly time frame, we have these longer-term moving averages still heading lower. And that means that we still have to be cautious. It's possible we're still in an area like this right here. So I'm not ready to call it, that the buyers are back in control overall. We need to do a lot more work, and hopefully we, see some continuation higher, but then we'll likely need to pull back and make a higher low at some point next week. As far as the way I'm looking at it, if we maintain above about 543.5, then we are going to continue to give the benefit of the doubt to the buyers. But if we start to, do something like this and then break lower, then it's likely we'll see a test of the 5-day moving average, and we'll see what happens in that area. We have to take it one step at a time. The NASDAQ, this is what I thought might happen for the NASDAQ, is that we might come up to this anchor, distribute a little bit, then roll over. We didn't see that, so let me just delete all that so we can take a fresh look at it. And again, this is the anchor from the all-time high here in the NASDAQ, in the Qs. We came up to it last time and got promptly rejected. This time we came up to it, and this level of interest showed no sign of resistance in there. Instead, what we saw was the buyers, maintained control and actually, took control in a very strong way here. This little pattern of higher highs and higher lows the last 2 days. So you can't fight that type of momentum. You can fight it, but you're going to end up on the losing side of that battle, of course. And that's not my goal, is to, not to fight those trends. Maybe we're going to continue up to the 50-day moving average in the year-to-date anchor. This is, again, the year-to-date anchored VWAP. And then perhaps we distribute. And it would be good if we came down in here and then, the 20-day moving average starts to ramp higher. And maybe this was the low. Maybe this was a V bottom. That typically doesn't occur that way, but again, you've got to keep an open mind. And remember that we're in earnings season right now. We saw Google report, and Google gapped up. And, it's right at that 50-day moving average, the 2-year anchor. That's probably not the best candidate, but NOW reported earnings yesterday, and that seemed to have turned its downside around, as did Pega. Big gap up in there. And then, Netflix, of course, is the real leader here since their last earnings report. And that continues to show higher highs and higher lows. So, the bottom line is we've got opportunity on the long side as well. And this week, what we saw is, a lot of what looked like potential short sales, like, if we had done something like this, I think we could have seen a deeper pullback in these markets. Instead, we saved that, and I think a lot of shorts are getting squeezed in here. Now, for the Russell 2000, we're coming up into an area that has the potential that prior support tends to act as resistance. We've got that anchor from the February high just overhead, the declining 50, the declining 200-day moving average as well. So we're getting a bounce, and I'm not long this market, but as I've been telling subscribers, what you want to do if you're long is raise your stop up underneath these higher lows, and maybe even as tight as that, if and you make your stops tighter as we come into these potential levels of resistance. The semiconductors, again, they had over a 10% rally this week, just an incredible move. But we've seen a lot of incredible moves in this market lately. And what we often see, and I like to point out, is if we overshoot a prior level that we get rejected from, that often marks a turning point. Now, we don't have any evidence that this is a turning point. That has the potential to be from a failed breakout, could come a fast move lower. But if so, it's going to stair step lower in here and do something like this. After a 10% rally week, it's not unusual to see some type of pullback. And then the quality of that pullback will determine what we see next. If we come back down and, on lighter volume, find buyers along the 20-day moving average and start to turn sideways and then higher again, well, then this is a new higher low. But right now, I would say just be aware that we got a little bit stretched to the upside. We broke past this prior high, and that's when we often see near-term reversals. Again, though, we don't have any evidence that there is a reversal here. We're above the daily VWAP, that's that blue line. We're above the 2-day, the 3-day, the 4-day, the 5-day volume weighted average price. So now is not a condition where you want to be selling short. Instead, you want to be saying, okay, we got a little stretch to the upside. We've found supply in this area before. It's an important anchor. Let's see what the market gives us from here. The biotech stocks, they dropped a little bit today. They traded an inside day, and they're having trouble with the anchor from this February handoff right here. And again, same story. I'm not long these biotechs, but as I've been saying, as long as we have these higher lows, then you want to maintain any long position you have. But when we start to break that pattern of higher lows, then you want to move to the sidelines because it often precedes distribution, which then leads to some profit taking. If we get profit taking, the 20-day moving average looks like this, the anchor from the low of the year looks like this, then perhaps we can rebuild and push for the 50-day moving average and start to work through these levels up in here. Here's a trend line that would come into play as well in that same general area. So, keep all of these tools in mind when you're looking at it and trade based according to your risk parameters. My risk parameters did not have me buy Ethereum as it hit the anchor from the inception of trading on Coinbase. We spoke about that a couple weeks ago, and it's been a beautiful bounce from there. You just can't make that up. That was pretty much the absolute low of this move so far. Now, I didn't buy it there, as I mentioned. I did, however, buy some right over in here, and I added to it, I think on this day, it was 1650. I think it was on this day I added to it. I made Alpha Trends subscribers aware of that. But I'm holding on to some Ethereum right now because the trend in the short-term time frame is higher. I think I'm likely going to get stopped out if it breaks below here. I did sell a little bit, but the bigger surprise to me is absolutely Bitcoin. When we were stuck below this anchor, I was thinking that we had a good chance of coming down towards this level. That, of course, didn't occur. We saw a nice tight consolidation, and it took off. And it took off without me. I don't get all the trades. It's not about getting every single trade, but the ones that you're comfortable with. I had Ethereum. Truthfully, this looks like a beautiful, this, I don't know why I wasn't paying attention or didn't get involved. Sometimes that's just how it goes. But, Bitcoin is likely, I think, to settle down in this area, test these anchors that had been prior support and maybe come in and build in this area. But Bitcoin, you've got to be impressed with that strength. I am. It was a big week for Bitcoin. And as I mentioned, I don't feel left out because I, had Ethereum. So hopefully you had, participated in there in some way as well. The financial stocks, they continue to be a little bit confusing, not confusing in here, but uncertain in that, this, what we were looking at as a head and shoulders pattern, and this being the neckline, had the potential to become resistance over here, but instead it leapt back up through that. So now I'm looking at this market and saying, is it going to hold on? It doesn't seem likely to me, but I don't have any evidence that it's not going to. I need evidence before I put a trade on. If we break back below here and then this level in this 47.5 becomes resistance, I think you'd be due for a test of this anchor, and then we'd have to see how it builds from there. Every week, it's week by week. I'm a swing trader. That's my preferred time frame. When we look at stocks like Apple is right up against this prior band of support. The 2-year anchor is this black line. The red is the anchor from the February high. So this is a place it's supposed to find supply. We don't have any evidence of that yet, though. So there's no reason to be selling your long position. Raise your stop up. And I'm hoping that maybe we see something like this, or maybe we're going to just continue to go up into this zone and close that gap. I'd prefer we pull back to that 20-day moving average. The 20-day moving average flattens out Monday, Tuesday, Wednesday as we average this data out. This red vertical line is where we were 20 days ago. That's what I want to happen. The market doesn't care what I want, but in order for me to get aggressively long Apple, I would want it to pull back and then buy strength after that pullback. Tesla had a big week here as well. Looks like it's heading for the 200-day moving average and the year-to-date anchor, somewhere up near that 300 level. It got very close to it today, breaking this trend line. There were some nice opportunities in there today. I only day traded it because, again, I've got a declining 50-day moving average. If I can make a good profit during the day trading it, then it's not my comfort to continue to hold it. I'm not here to tell anyone what to do. I'm here to show you some methods. You decide what to do with the information. Palantir continues to be a monster, just continuing to show these higher lows. So if you're involved, raise your stop up under the one that makes most sense to you. NVIDIA did get a little bit of better performance here today. It had really been a laggard in terms of these semiconductors. And as I've been pointing out, this has the potential to become a higher low, but you wouldn't necessarily want to buy the higher high because you have to ask yourself, where did it come from? It just came from 95, and if it breaks to a higher high at 115, that means it would have rallied 20 points, or about 21, 22%. I'd like to see it, this is the important anchor recently from this high. We saw supply there, and there, and there. So maybe we run up to the 50, pull back, make a higher low, and then can rebuild. But it's getting a little bit stretched. Doesn't mean it can't continue to move higher. I'd really like to see it break beyond this 115 level before we start to see some profit taking. So, if you're looking to get involved in this one, look for pullbacks, and as it gets back above the higher high, it makes a higher high and a higher low on a very short-term time frame. You get involved here with a stop under there, and maybe you've got to run towards that 115 level. Anyway, that's it for me today. Have a good weekend, everybody, and thanks for tuning in.